What's happening, y'all? It's Mike the Money Motivator, man. Y'all know how I do every week. Sunday swing trade setup. So in this video, I'm gonna go over my plays for next week. I'm gonna go over my plays for the upcoming week. I'm gonna show y'all the plays that I did last week, and this one, I'm gonna give y'all a little bit more education. So, um, if you're new to swing trading or swing trading at all, swing trading is when you trade stocks. You're going to look at candlestick charts or whatever, and you're holding a position overnight. You know what I'm saying? Sometimes a day, sometimes 2 days, sometimes over a week period. So, without further ado, man, let me get into last week. My swing trade setup for last week. Let's see what I was talking about. All right, we on episode 8 last week. We go ahead and press play on that thing. Within the Bollinger Band, and we're way outside of it. Y'all see the last time that we were outside of the Bollinger Band, what happened? All right, so we look like we got a doji at a downward trend outside of the Bollinger Band. All right. So that was when I called it on the last episode 6 days ago. So let's go to TradingView and see what happened. And if you're new to swing trading or day trading or whatever, when I'm looking at these charts, if you look in this top corner over here, it's a day period. So each candle represents a day. So when I'm swing trading, I'm expecting, you see how these candles ended lower each time? When I'm swing trading, I'm expecting, I only swing trade in the upward direction. So when I'm swing trading, I'm expecting the stock or the next candle or two to go in a reversal direction, right? So let's pull out the chart and let's see what Google did after that little doji thing. Yep. Just as expected. And I couldn't really do this trade because I was out of town again. But if you look right when I called it, it was up for the next like 4 days. I called it right here. As y'all can see in that last video. The next candle was up, the next candle was up, the next candle was up. So usually I get out, you know what I'm saying, on probably day 2 somewhere here where it would have hit this purple line to reject. I probably would have got out, but it even went higher. So I'm still undefeated on the swing trade setup. That was the last play. I got another play for this week. Let's look at the overall market. So we're gonna go to VTI and let's see what the total stock market index is doing. All right, make sure y'all can see this. All right, so when you're looking at this chart right here, if you look at this top red line up here and this bottom green line right here, that is the Bollinger Band. And what's really good about the Bollinger Band is gonna let you know when the stock is overbought or oversold. These indicators do the same thing, but the stock trades within this Bollinger Band. So for a swing trade, it's a really good idea for that stock to be within inside that Bollinger Band, right? If you look throughout time, it stays within inside, and then when it goes outside, it makes its way back in, right? So if it goes outside of the Bollinger Band, it has gravitational pull, right? So the total stock market index, we got a hammer candle. Let's see if that's a nice level of support. So how I'm finding out a level of support? A level of support is when a stock, you go to the bottom of the wick like I did right there, and if the stock is respecting that level over a historical amount of time, as you can see, it came down here, bounced up. So if the stock continues to respect that level multiple times, we're near all-time high, so I don't think it's going to be nothing down in this direction. But it's a thing to take note of because it hit this area once before, right here, right here, and now it's hitting it again. So that's like the third touch of this support level. A third touch of support is a good support. Also, this hammer candle, if you're not familiar with the hammer candle, let me go ahead and pull that up for you, right? So let me go ahead and pull it up. So swing trading and day trading is two completely different things. When you're swing trading, let me make sure y'all can see this. When you're swing trading, you're looking to hold a position over a day, multiple days, all that, you know what I'm saying? But when you're day trading, you're kind of really just holding for, you know what I'm saying, a couple seconds or whatever. So profits on day trading are a lot more significant. But let's look at this hammer candle. So the hammer candle is a price pattern candle that occurs when a security trades significantly lower than its open, but rallies when the period closes near to the open price, right? And it's a hammer candle is a price pattern that indicates a potential reversal to the upside. Okay. So that's what the hammer candle do. So let's go back to the chart. Since the hammer candle suspects a potential reverse to the upside, we got, hold on, let me pull it up. So we got on the total stock market index, which is VTI, we got a hammer candle. A hammer candle coming down to a level of support, and we're outside of the Bollinger Band. Y'all see that? So what I'm looking at the overall total stock market, it looks like we're due to go up, right? But we also got a divergence. I ain't even see this before, but I'm gonna show y'all what a divergence is and how you know that a stock is gonna make a reversal. So far we're still looking at the total stock market index. So a divergence, and I'm gonna pull up the definition for y'all so y'all can see. But a divergence is when you got the stock making higher lows. You see that? But your indicators are making lower lows. So right here is making a lower low. And look like on the MACD indicator is making lower lows as well. Right? So we got the hammer candle. When you're doing a trade, you need a whole bunch to line up. You know what I'm saying? If you're gonna put money on it, you got to make sure you're right. That's why I'm only showing y'all like my best trade setups, because I don't want y'all to be wrong. I don't want to be wrong either. But we got a divergence on the total stock market. So we're outside of the Bollinger Band with hammer candle, touching a third touch of support. Looks like the stock market is going to take a turn in the other direction. So let me pull up divergence. So if you've never seen that before, you can see that now. Let's see. Swing trading divergence. All right, this is perfect right here. So with a divergence is when the stock and the indicator are going in separate directions, right? So let me pull up this explanation. Nah, that's the wrong one. All right, so this is a divergence when the price makes a lower low, but the indicator makes a higher low. It can also be vice versa when the stock is making a higher low and the indicator is making a lower low. You also have regular divergence where the price is making lower low, indicator is making higher low, and you have hidden bearish divergence, right? So these are little tricks you want to look for outside of just the trend and the candlestick and the patterns and all of that. But you also want to trade with the trend. So how do you know which direction the trend is. This is something that I never showed y'all um, on swing trade setups. I'm gonna show you how you identify the trend and how you know which direction the trend is going in. So let me share this. So when you look at the down here, you can see this red line right here. That's the 200 moving average. Let me see what y'all see. Make sure. All right, this red line down here is the 200 moving average. If you notice, we got to the top of the Bollinger Band up here, we peaked, and then the market started to crash down. But we're still in the uptrend because that 200 moving average is still going in the upward direction. So let me show y'all for teaching purposes when it was pointing down and show y'all what that looked like so y'all could get a little more confirmation and a little more understanding of what I'm saying, because you're like, man, the market's been crashing. How are we in an uptrend? That 200 moving average will show you. So all of this is uptrend. We've been in an uptrend. We've been in an uptrend. Now the stock is below, and this is going backwards on a daily chart. The stock was below the 200 and it was in a downtrend. Come on, go back. So it's in an uptrend. It's in an uptrend, which the stock market is in an uptrend most of the time. But now it looks like the 200 moving average might be shifting when we go back. Look like a sideways market way back here. But yeah, look like the total stock market index stayed above the 200 MA most of the time. But when it goes below the 200 MA, which is that red line, we are in a downward trend. Most of the time, the stock market is in an uptrend. But when it's on a downtrend, it takes the elevator down, so it goes down really quickly. All right, so let me not skip some steps. I usually look at the fear and greed index. So let me pull that up for y'all. All right, what are fear and greed? Fear and greed index. So with the fear and greed index, you want to be greedy when others are fearful and fearful when others are greedy, right? So this is like, you know what I'm saying? You kind of want to do the opposite of what the fear and greed index is talking about. So the fear and greed index is telling me that the market is fearful. Look like we need to make a turnaround. There's a lot of fear. Look at that. Very fearful. The market is very fearful, and that's how the market gets you, right? So we're big fearful. So based on VTI, the total stock market index, and the fear and greed index, it looks like we're due for a turnaround. But let me look at the VIX. So the volatility index is an inverse type situation. So when this volatility index is up, the stock market is down. Hold on, let me put up the volatility index. All right, so when the volatility index is up, the stock market is down, right? If you look, the volatility index is all the way up and it's outside the Bollinger Band. So it looks like we hit a bottom. It's way higher than it was in April when the market was going down. It's way higher than it was in October when the market was going down. We're way outside of the Bollinger Band, due for a reversal. Another thing that says that we're due for a reversal in the volatility index is that this stochastic oscillator, when these lines cross each other, that means it's changing the direction, right? So if you look over here, this blue line then crossed down below the orange line, showing that we made a change in direction. So the stochastic and the volatility index being high and outside of the Bollinger Band is telling me that we got one direction to go. So this is how you can tell which way you expect the market to go, right? The fear and greed index, we're fearful. The volatility index is up, due for it to come back down, which means the stock market is expected to go up. VTI, the total stock market index, looks like it's going up as well. So without further ado, I'm gonna get into my plays. I'm gonna show y'all I got like 3 of them. My favorite is the last one, but I'm gonna get into my plays, and then after I show y'all my plays, I'm gonna go into a little day trading, swing trading education, just in case you want to stay and watch that. You know what I'm saying? So I'm gonna go into my plays now. Where's Trading View? All right, so first play, I think it was Tesla. All right, first play I like is Tesla. And y'all bear with me with these lines on the chart, man. I be tripping with these lines. It's like I'll put them in and I never take them out for some reason. Let me make this better visible so y'all can see. Let me pull it up bigger. All right, so there's a couple reasons why I like Tesla, right? I like Tesla because I like to trade divergence and I see a divergence on Tesla, right? So if y'all remember from the beginning of the video or the beginning of the lesson, we got, why is this green? Make it black so we can see. So we got higher lows. This is on a daily time frame. A divergence is something you want to do on a higher time frame, right? So we got higher lows. On the RSI, we got lower lows. On the MACD, we got, well, that's not the MACD, but all indicators are showing lower lows. MACD not necessarily showing lower lows yet, but so we got a divergence on Tesla. So I like Tesla. We also are towards the bottom of a Bollinger Band, right? The bottom of the Bollinger Band is right there, and we're right on top of 2 moving averages. That's the 200 and maybe the 20. But we're right on top of both moving averages, showing a level of support. And if you look at this line underneath that last candle where we bounced up from, we've been bouncing from that area a couple times. So that's a strong level of support for Tesla. Let's go back. Let's go back. As you can see, Tesla just always rejects off of this green line right here up top. It rejected here. Let's go back. It rejected here. Like that level right there is a strong level for Tesla. It rejected here. So if you look back at history, man, it shows you perfect areas and perfect times. You know what I'm saying? Perfect times to go ahead and jump into play. Just because the swing trade setup is perfect doesn't mean it's the right time to enter. So you find the play on a long time frame. You find the play on the longer time frame, like the daily time frame. I look at all time frames, but I make sure the daily is the most important for me on a swing. So, but then you use your smaller time frames for your entry. And I'm gonna go over that in a little more depth on my favorite one. So that's Tesla. I like Tesla for next week, probably a 1 to 2 day hold. So now I'm gonna get into my next play, um, Nvidia. So I like Nvidia for the same reason. We got a divergence on Nvidia. Let me go back to the chart. So NVIDIA, we got higher lows on the stock. We got lower lows on the indicator, lower lows on the indicator. It's not the best divergence, but we're also at the bottom of the Bollinger Band, which means we're oversold. And what it looks like is that we're about to form a double bottom. So the double bottom is not confirmed until it breaks this purple line right here. Now, to be honest, this might be a good swing trade to go ahead and jump in, maybe, but it's not a confirmed double bottom until it breaks this midline right here. But then even after that midline, you got these two moving averages right there. So I would really wait till it break those two moving averages to really confirm. You could probably jump ahead of the gun now and, you know what I'm saying, make a little risk if you want to. Let's take a look at the 4 hour chart. Oh, 4 hour chart is nice. So I really like it on the 4 hour chart to confirm my thesis on the daily because it also looks like a double bottom, but we're bouncing right off of the 200 MA. This red line is the 200-day moving average, which is a strong line of support. Support is an area where the stock will go down to and bounce up. So you buy call options at support. Perfect time to jump in a swing trade is at support. So NVIDIA is at the 200 moving average level of support at the bottom of the Bollinger Band. And we're also about to cross right here on the RSI going up. It looks like we just swung back on the upside of the middle of the Bollinger Band. So to go over the RSI and the Bollinger Band, what I'm talking about when it crosses. When you see this blue line cross down below this orange line, you see that the stock moves in that direction. Then it crosses back over, the blue line crosses back over, and the stock goes in that direction. Crosses back down, and the stock goes in that direction. Now it's crossing back up. So you want to catch the trade when it's crossing right back up. NVIDIA is crossing right back up. It's at the level of support, and it's at the bottom of the Bollinger Bands. When you have all of these things kind of set up, it's kind of like, bro, you know, put some money at it. Put about a quarter of your trading account. If you got 1,000, put 200. Swing it for a couple days. You already at the bottom. So even if it goes down tomorrow, you still got 4 more days out of the week to hold a trade. And, you know, if you lost that 200, you lost it. But if you got the play from me, if you watch the rest of my swing trade Sundays, you see that we ain't losing no trades. But with that said, we went over 2 stocks. Let me give y'all my favorite one, and then I'm gonna get into a little bit of trading education for beginners. You know what I'm saying? People that probably don't understand all of this of what I'm talking about right here. Um, but also to go over the RSI. So the RSI shows overbought and oversold. That's this right here. Over the RSI consists of this purple line and this yellow line. When they cross up and down through each other, that's a change of direction, but it also shows overbought and oversold. So this line right here is overbought. Once it gets up this area, you can expect the stock to start to come down. When it gets to this area, you can expect the stock to start to come back up. What I have additional on the RSI is the Bollinger Band. These same bands that I have within the price action, the candlesticks, I add them to my RSI. So as you can see, the Bollinger Band can show like hidden level of support and resistance. You go way outside of this level right here, where if you only had the RSI, you would have thought it would have reversed over here, but it kept going up and it stayed within inside the Bollinger Band, popped out of it a little bit, but that's why I like the Bollinger Band because it shows the hidden levels within the original levels of the RSI. So when the RSI crosses the middle line, there's a middle line of the Bollinger Band, which I think is like a 20 moving average or whatever. When it crosses that middle line in either direction that also shows you which direction the stock can go. So looking at Nvidia on the daily time frame and the 4-hour time frame, it looks perfect. This is how I would enter it, right? Let's see what the 5-day looking like. So if you wanted to enter the trade on Nvidia, on the smaller time frame, we look way overbought. Because if you're looking at the Bollinger Band and the RSI and the stochastic, we're all overbought. If you look here, this last candle was outside of the Bollinger Band. This is way up at the top of the RSI. This is way at the top of the Bollinger Band on the RSI, way at the top on the stochastic, right? So we're way oversold. So if Nvidia gaps down in the morning, and what I mean by gap down, if it starts lower, like if you look on this day, there's a big gap here, and that's because the stock started lower on that day. So if it gaps down and comes to this area, I might enter the trade sooner than later if I was in Nvidia. But I would wait until some point of the day where Nvidia gets closer to this bottom range, and then I would enter. So it looks like a good trade, but I will wait for the perfect timing. I'll wait, maybe midday, 12 p.m. or something like that. Once I know we kind of hit like a bottom range, and then, let Nvidia kind of ride out. But I actually will not be swing trading Nvidia because I got a setup that I like more, right? So my last swing trade I'm gonna go over with y'all is Amazon, right? And I'm gonna tell you why I love Amazon. Let me make sure y'all can see this. So this is why I love Amazon for the swing trade. We are way outside of the Bollinger Band, right? So Amazon reporting earnings and they crushed earnings, smacked it in the face. But whatever it is, I don't know if the market didn't like their announcement on AI or whatever the case is. It went down even though they beat earnings. So they beat earnings. We got a hammer candle at the bottom of a downtrend. So if y'all remember before, the hammer candle at the bottom of a downtrend is a reversal. It's a reversal candle. So what I like to do when I see a hammer candle at the bottom of the downtrend, I like to draw a trend line right at the bottom of the wick just to see if we have other levels of support or resistance. So it looked like we got one right here. We had highs, so I don't expect to see too many. I ain't gonna go all that far back. Let's see. That pink line. Okay. One more touch over here on the pink line. One more touch over here. So when you go back in time and you see the stock bouncing, here we go over here, touch that pink line and bounced off. So when you go back in time and you see that the stock is bouncing off of that level, that shows you that that's a strong level of support, and you can either get in or out. You know what I'm saying? Depending on, depending on whatever the case is, whether you're trying to stay in the trade or get out of the trade. But let me refresh this. So we are way outside of the Bollinger Band on Amazon. And this is after smacking earnings in the face. They killed earnings. Their earnings report was great. So that's on the daily chart. We got the hammer candle at a level of support. Let me make sure I'm sharing this with y'all so y'all can see it. Okay, yeah. So we got the hammer candle at a level of support way outside of the Bollinger Band, oversold on the RSI, oversold on the stochastic. So that's the daily chart. Let's look at the 4-hour chart. Okay, the 4-hour chart is looking good too. So On the 4 hour chart, the 4 hour chart is not necessarily giving me confirmation, but I do like what I see. On the 4 hour chart, we're also outside of the Bollinger Band, right? And excuse me for all this confusion, man. I draw support and resistance levels and I never like pull up, take them off or whatever. But we got this hammer candle at a level of support. We're still below the Bollinger Band, right? So we need mean reversion trading. Mean reversion is the stock has to stay within a mean, right? The Bollinger Band is a mean, or the RSI is a mean, or the stochastic is a mean. Within this blue area right here on the stochastic, that's a mean. And the RSI within this purple area is a mean. So mean reversion trading is when the indicator gets to the completely other side, you play it to the other way, right? So we're outside of the Bollinger Band and we want to play it north. So Amazon is looking real good. We got the hammer candle. We're outside of the Bollinger Band. It's not really a confirmation. If you wanted to wait for exact confirmation based on a 4 hour chart, you would wait until the stochastic crossed this orange line, which is probably going to do at some point tomorrow. So you will wait for that to cross, or you could wait for the RSI to cross this middle line right here. The RSI does move slower than the stochastic. So if you're already confident, like I am about Amazon, you could wait until this one crosses the orange on the stochastic oscillator and then let that do its thing. So that's the daily, that's the 4 hour. Let's look at the weekly. Oh, the weekly is perfect too. The weekly is perfect too. So y'all can probably see why I like the weekly. Let me make sure y'all can see what I see. So y'all can see why I like the weekly time frame, because we got a divergence, right? We got a divergence on the weekly time frame. We got the stock making higher lows, and we got the indicators making lower lows. See that? Stochastic making lower lows. We got the RSI making lower lows. So we got a divergence on the weekly time frame. I love it. And on top of that, we are way outside the bottom of the Bollinger Band on the weekly time frame. We're also way outside of the Bollinger Band on the RSI. So this is the bottom of the Bollinger Band right here, and we're outside of that. We're also bouncing off of this moving average. I don't know what moving average this is, but moving averages are a strong level of support, and it's bouncing off of that. So the weekly, daily, and 4 hour chart is all saying that Amazon is going up, and that's gonna be my best. That's gonna be my best play for next week, man. I like all of the ones I mentioned, but to be real, looking at the charts, I really like, you know what I'm saying? I really like most of the market should be going up next week, but Amazon was the best I could find for the swing trade. Look at your shorter time frame. Don't just jump in the trade right away. I've had a lot of success doing that, but you could catch a heart attack watching it decline or whatever. In the short time frame, like I said earlier, Amazon is at a high. So you want it to come down a little bit and enter the trade later, probably afternoon or late morning type time, right? So I'm gonna get into. So that was it for Swing Trade Sunday. If you're a new beginner, I want to get into some trading education, just some easy to digest stuff, so I can make it a little easier for y'all when y'all are following me. And you know what I'm saying? And you like, man, this stuff confusing, man. I just don't understand. So what I'm gonna break down, I'm gonna break down at least. So from what you can see, the candlestick and how to read them, right? Now, all of that extra stuff, if you can see this chart, hold on, let me make sure y'all can see what I see. All right, hold on, let me pull the chart back up. So if you can see this chart, it looks completely different from what y'all see when I do this swing trade setup. Completely different. But this is what an original chart looks like. And what it's showing you, this is on a daily time frame. You could trade on a minute time frame, 3 minute, 5 minute, 15. The longer time frames show you the trend of the market. The shorter time frames is for day trading. So the shorter time frame is for what we call scalping. On a shorter time frame, the 1 minute, 2 minute, 3 minute, 5 minute, 15 minute, those are the time frames where you want to be in and out. 2 minute trade, 5 minute trade, 15 minute trade. Make a couple hundred, make a couple thousand, stick and move. On swing trading is more profitability, but you hold for a longer period of time, usually holding overnight. So on a swing trade, you really want to look at a 4 hour time frame to like a daily time frame, but you really want to look from a 4 hour time frame and up for swing trades and lower than that for day trades. But this is the basics of the candlestick chart. Usually, when I show y'all my swing trade setup, y'all can see all the indicators and the lines and all of that. But if you're looking at Apple on a daily chart, what I see on Apple, right? Apple is making higher highs from here and is trending, making higher highs. So one, it tells me that Apple is in an upward trend, right? We always, after upward trends, we always make retests. We always make new bottoms and make new highs. That's how the market works. So when we make new highs, expect it to come down. It's a natural, you know what I'm saying? It's a natural behavior of the economy and traders and buyers versus sellers, right? But when you're reading a candlestick, you have bearish candlesticks, which is the red ones, and you have bullish candlesticks, which is the green ones. So the candlestick is the body. This is the body of the candlestick. All of this green right here. On each time frame, it represents what that time frame is. So on a daily time frame, this represents 1 day. So this long candlestick, this was all of the price. Looked like Apple went from probably 194 to about 207 in 1 day, right? So that's 1 day's price movement. Though, so you have the body of the candlestick and you have the wicks. The wicks are these smaller lines coming up from the top or bottom of the candle. When you have long wicks coming from the top, that's showing a rejection from a certain level, showing that that's a level of interest. That might be a level of support to pay attention to, right? So let me go back. Let me go back and see. Just based on the wick, I'm going to draw a level of support, and we're going to see if that is a respected level of support or if the stock respects that level, right? So we got that long wick. The market smacked that candle back down, right? So just by drawing that one line right there, you leave that on your chart and you like, okay, the market touched it. The market touched it here. The market touched it here. So that would be resistance. If it goes up and bounce down, that's resistance. We got another level of resistance here, here, and a level of support there. So the wicks are going to tell you what the behavior was or what everything was during the transition of the market, right? So sellers smacked it back down, and you notice the next 2 days it was red. But now you have a nice level of support or resistance, right? The red candles is the top of the candle is where the day started. The bottom of the candle is where the day finished. And on the green, it's the opposite. The bottom of the day is where the day started, where the day finished. The wick would be, okay, so it started here. The stock went all the way up to here, but by the end of the day, it came back down. So the wick shows the motion throughout the day, but not actually the start and the ending price. So the start and end is in the candlestick, and the wick is the motion that took place throughout the day. So that's how you read. My laptop actually about to die, but that's how you read candlesticks. If you want specific, lives or videos on how to read candlesticks or more day trading education, man, y'all just hit your boy, man. I'll make a video specifically based on your request, whatever it is. But I gave y'all the swing trade setups, man. Y'all be easy out here. Don't let the market take y'all money. I've been undefeated with this swing trade setup. So y'all use my plays, man. Use my plays. And Amazon is my best swing. I'm most likely gonna be doing that one. I'll probably post. I'll probably show y'all my I'm not gonna throw too much at it, but I'm gonna show y'all my results and all of that, so y'all can see that. You know what I'm saying? Maybe if I show y'all dollar signs next to these candlesticks and all of that, maybe that'll get you a little more intrigued. But you know what it is. Until next time, man. Y'all like and subscribe.